Imagine building a financial empire, brick by bond, only to see it shake, then crumble. This isn't just a story about money, it's about power, ego, and the man who called himself the Bond King. Bill Gross wasn't just a player in the financial markets. For decades, he was the market. He co-founded PIMCO and turned the sleepy world of bonds into a high-stakes, high-reward game that made him a legend and his clients fantastically wealthy. But what happens when the king's crown starts to slip, when the genius that built the empire becomes the very thing that threatens to tear it down? Today, we're diving deep into the epic rise and spectacular fall of Bill Gross, inspired by Mary Childs' incredible book, The Bond King. This is the untold story of his revolutionary strategies, the power struggles that consumed his firm, and the critical lessons his story holds for every single one of us. So, how did a man become synonymous with the entire bond market? To understand Bill Gross, you have to go back to the beginning, to the birth of PIMCO in 1971. Back then, bond investing was boring. It was a buy-and-hold game, considered safe but unexciting. Banks and insurance companies bought bonds and just waited for them to mature. Bill Gross saw things differently. He believed you could actively trade bonds, just like stocks, to generate much higher returns. This concept, known as active bond management, was revolutionary. He and his team at PIMCO weren't just parking money. They were hunting for opportunities, making big bets based on their forecasts of interest rates, inflation, and global economic trends. This led to the creation of their flagship fund, the PIMCO Total Return Fund. It wasn't just a fund, it was a phenomenon. For years, it was the largest mutual fund in the world, and Gross was its undisputed king. He developed a philosophy called structural alpha, looking for long-term trends and exploiting them. He was a master of anticipating the Federal Reserve's moves, earning him another nickname, the Fed Whisperer. He made PIMCO a powerhouse, and his success made him a celebrity, a financial guru whose every word could move markets. Bill Gross's genius was undeniable. He had an almost uncanny ability to read the market's tea leaves. He famously bet against subprime mortgages before the 2008 financial crisis, a move that saved his clients from catastrophic losses and cemented his legendary status. His strategy was a mix of deep macroeconomic analysis and bold, often contrarian bets. He would analyze global economic data with obsessive detail, looking for discrepancies and opportunities that others missed. He wasn't afraid to go big. If he had conviction in a trade, he would pour billions into it. This aggressive style created incredible returns and attracted a tsunami of money into PIMCO, which at its peak managed over $2 trillion. But with this success came an intense cult of personality. PIMCO wasn't just a firm, it was Bill Gross. He was the face, the voice, and the brain. Clients weren't investing in PIMCO, they were investing in Bill. His morning notes were required reading on Wall Street, and his television appearances were major events. This immense power created a unique environment inside the company. He demanded absolute loyalty and perfection, fostering a culture that was both incredibly successful and incredibly stressful. The pressure to outperform was immense, and it all revolved around one man. As PIMCO grew into a behemoth, so did Bill Gross's ego. The very traits that made him a brilliant investor, his intensity, his obsession, his need to be right, began to curdle into a difficult and often erratic management style. He was known for his public call-outs of employees, his unpredictable moods, and his complete intolerance for dissent. The trading floor at PIMCO became a gladiator pit, where only the strongest, or those most willing to please the king, survived. This created a toxic environment ripe for conflict. The power struggles were inevitable. Mohamed Lirian, his co-CEO and heir apparent, was a brilliant mind in his own right, but even he couldn't coexist with Gross's domineering personality. Their clash was the stuff of Wall Street legend, Battle of Titans, that shook the firm to its core. Lirian's sudden departure in 2014 was the beginning of the end. It exposed the deep fractures within PIMCO and raised questions about who was really in charge. The firm had a too-big-to-fail mentality, but it was dangerously dependent on a single, increasingly unpredictable man. The king's behavior became more and more bizarre, culminating in his dramatic and messy exit from the very firm he built. He was, in essence, fired from his own kingdom. So, what can we learn from this epic financial saga? The story of Bill Gross is a powerful, cautionary tale. First, it highlights the immense danger of an unchecked ego in finance, or any field for that matter. Gross's self-belief fueled his success, but his hubris led to his downfall. He couldn't accept that he could be wrong or that others could have valuable ideas. The second key lesson is the critical importance of succession planning and strong corporate governance. PIMCO built its entire identity around one person. When that person faltered, the whole structure was at risk. No single individual, no matter how brilliant, should be more important than the institution itself. Third, his story raises questions about market timing versus long-term strategy. Gross was a master market timer, but even he got it wrong sometimes. His final years were marked by a series of bad bets that tarnished his record, reminding us that trying to consistently outsmart the market is a near impossible task. Finally, and perhaps most importantly, the Bond King's tale reveals the profoundly human element in financial markets. Markets aren't just numbers on a screen. They are driven by fear, greed, ambition, and ego. Bill Gross was a genius, but he was also human, and his story is a timeless reminder that even kings can fall. In the end, what is Bill Gross's legacy? He will forever be remembered as the man who revolutionized bond investing, a true pioneer who changed the game. His concept of total return and active management reshaped an entire industry and created immense wealth for countless investors. He was a titan, a visionary whose market calls defined an era, but his legacy is also a warning. It's a story of how a brilliant mind, consumed by the need for power and control, can sow the seeds of its own destruction. The lessons from his triumphs are as valuable as the lessons from his downfall. They teach us about risk, about leadership, and about the delicate balance between confidence and arrogance. The king may have lost his crown, but his story continues to offer invaluable wisdom for investors, leaders, and anyone navigating the complex world of finance. What do you think is the biggest takeaway from the story of the Bond King? Let me know your thoughts down in the comments. Thanks for watching. And if you found this deep dive interesting, make sure to like and subscribe for more stories from the world of finance.